You know what's terrifying? It's not the spike itself. It's what happens in the 48 hours after everyone notices. Right now, while you're watching this, there's a pattern forming in silver that only shows up twice, maybe 3 times in a generation. And here's the part that'll keep you up tonight. The last time this exact setup appeared, silver didn't just double. It moved so fast that by the time people realized what was happening, the opportunity was already gone. But there's one indicator, one single piece of data, that's about to tell us if this is the beginning or the trap. Welcome to Silver Radar, my friend. If you've been around long enough to remember when a handshake meant something and the evening news actually told you the truth, then you know why you're here. Do me a favor, would you? Hit that subscribe button right there. Not for me, but because in times like these, you need someone who will give it to you straight. No fancy jargon, no Wall Street double talk. And drop a comment below. Tell me where you're watching from today. Are you tuning in from Texas, Ontario, maybe somewhere across the pond? I want to know who's paying attention while the rest of the world's asleep at the wheel. Now, let me tell you something that's going to sound crazy at first, but stay with me, because by the end of this, you're going to see the silver market in a completely different light. It's Tuesday, January 27th, and I'm recording this at 9:34 in the morning, Eastern Time. Why does that matter? Because in the last 72 hours, something shifted, not just in silver, but in the entire psychology of how people are viewing precious metals. And here's what nobody's talking about. When silver broke through $100, it wasn't just a number on a screen. It was a signal that the rules we've been playing by for the last decade, they might not apply anymore. Now, I know what you're thinking. We've seen rallies before. Silver gets hot, everyone piles in, then it crashes back down, and we're left holding the bag. And you're absolutely right to think that way, because that's exactly what's happened, over and over again. But here's where it gets interesting. This time, there's something different underneath the surface. Let me paint you a picture. Imagine you're standing at the base of a mountain, and you've been watching climbers attempt to reach the summit for years. Some get halfway up, then slide back down. Some get 3/4 of the way, then run out of oxygen and have to turn back. But this time you're seeing something you've never seen before. The climbers aren't just reaching new heights, they're doing it with less effort than before. The resistance that used to stop them, it's not there anymore. And that, my friend, is what's happening in silver right now. We just blew through $100, a level that used to be this massive psychological barrier. And the market barely even blinked. No massive pullback, no panic selling, just steady, methodical buying. Now, here's where most people make their first mistake. They see that move, they see silver screaming higher, and they think, I've got to get in right now before I miss it. But let me ask you something. Have you ever noticed that the biggest moves, the ones that change generational wealth, they don't happen when everyone's excited. They happen when everyone's confused. And right now, the confusion is off the charts. I'm reading headlines that say silver is overbought. I'm seeing analysts calling for an immediate correction. I'm watching traders on social media say, this is the top. But then, when I look at the actual data, when I look at what's happening in the derivatives market, when I look at the supply chains, when I look at industrial demand, I see something completely different. I see a market that's not overbought. It's underowned. I see institutional money that's been sitting on the sidelines for years, finally starting to position. I see central banks that have been net buyers of gold, now quietly looking at silver. And here's the kicker. I see a commodity that the world needs more than ever, but can't produce fast enough to keep up. Solar panels, electric vehicles, 5G infrastructure, medical devices. Every single one of these industries is dependent on silver. Not gold, not platinum, silver. And yet, when you look at the above ground supply versus the projected demand over the next 5 years, the math doesn't add up. Something's got to give. Either prices go significantly higher to ration demand, or we're going to see shortages that make the semiconductor crisis look like a minor inconvenience. Now, I'm not here to tell you that silver's going to $300 tomorrow. That's not how markets work. But what I am going to show you in the next few minutes is why the question isn't if we see $300 silver. The question is when and what has to break for us to get there. Because here's what keeps me up at night. Every major silver rally in history has been preceded by the same 3 conditions. And right now, we're seeing 2 of them play out in real time. The third one, it's the one nobody's watching, and it's the one that matters most. So the question you need to ask yourself is this: are you watching the right signals, or are you watching the noise? Because in the next section, I'm going to show you exactly what to look for. All right, let me tell you a story that Wall Street doesn't want you to hear. Back in 1979, there was a man named Nelson Bunker Hunt. Now, Nelson wasn't your average investor. He was a Texas oil billionaire who looked at silver and saw something nobody else was seeing. And while everyone was chasing stocks, while the so-called experts were laughing at precious metals, Nelson quietly started accumulating silver, not just a little bit. We're talking about millions of ounces. And here's what happened next. Silver went from $6 an ounce to $50 an ounce in less than a year. People called it the Silver Thursday crash when it finally came down. But here's what they don't tell you in the history books. Nelson wasn't wrong about silver. He was just early, and he was playing with borrowed money. The fundamentals he saw, they were real. The demand he predicted, it came, just not on his timeline. Now, why am I telling you this story today? Because we're standing at a similar crossroads right now. Except this time, it's not one Texas billionaire moving the market. It's entire nations. Let me break this down for you in a way that'll make sense. Right now, as I'm speaking to you, there are three forces colliding in the silver market that haven't collided like this in over 40 years. Force number one, the industrial demand tsunami. Every electric vehicle that rolls off the production line needs approximately 1 kilogram of silver. That's about 32 ounces per car. Now, the global auto industry is projecting 30 million EVs by 2030. Do the math with me here. That's 960 million ounces of silver just for cars, not counting solar panels, not counting 5G towers, not counting medical equipment, just cars. And here's the problem. Total global silver mine production last year, about 830 million ounces. You see where this is going? Force number two, the invisible shortage. Now, most people think there's plenty of silver around. After all, we've been mining it for thousands of years, right? But here's what they're missing. Unlike gold, which sits in vaults and gets recycled, silver gets consumed. It goes into solar panels that last 25 years. It goes into electronics that end up in landfills. It gets used in ways that we can never recover it from. And over the last decade, we've been consuming more silver than we've been producing. Year after year after year, the above-ground stockpiles have been quietly draining, and nobody noticed, because the price was suppressed. But now the world is waking up to the fact that the silver that's available, it's not really available anymore. It's already spoken for. Force number three, the trust collapse. And here's the big one, the one that changes everything. For the last 50 years, people trusted the system. They trusted their currency, they trusted their banks, they trusted their government to manage the economy responsibly. But something broke in 2020, and it hasn't been fixed. People watched trillions of dollars get created out of thin air. They watched their savings lose purchasing power year after year. They watched the safe investments become the riskiest bets on the table. And now they're looking for something real, something that can't be printed, something that can't be inflated away, something that has actual utility in the real world. And that something is silver. But here's where it gets absolutely wild. When you combine these three forces, industrial demand that's exponential, physical shortages that are accelerating, and a trust collapse that's sending people scrambling for tangible assets, you don't get a normal bull market. You get something else entirely. You get what happened in the 1970s, but on steroids. Because in the 70s, it was just inflation and fear driving precious metals. Today we have inflation, fear, and unprecedented industrial demand. It's like throwing gasoline, oxygen, and a match into the same room and hoping nothing ignites. So when people ask me, will we see $300 silver in 2026? I don't think that's even the right question anymore. The right question is, what happens when the market finally realizes that there isn't enough silver to meet demand at any price? Because that's when things get really interesting. And that's exactly what I'm going to show you next. Now, I need you to forget everything you think you know about market crashes for a minute. Because what I'm about to tell you goes against every instinct you've developed as an investor. Most people think crashes happen when prices go down, but that's not entirely true. The most devastating crashes in history, they happened when prices went up too fast, for all the wrong reasons. Let me take you back to a moment most people have forgotten. March 2008. Bear Stearns just collapsed. The financial system is teetering on the edge. And what did gold do? It dropped $200 in 2 weeks. Wait, what? Financial crisis? And gold fell? That doesn't make sense, right? But here's what was really happening underneath. Banks and hedge funds were getting margin calls. They needed cash immediately. And the only thing they could sell quickly, their profitable positions. Gold wasn't falling because it was weak. It was falling because it was the only thing liquid enough to sell. Now, fast forward to today. Silver just broke $100. Everyone's celebrating. The Reddit crowd is talking about $500 silver. The YouTube gurus are doubling down on their moon predictions. And I'm sitting here watching something that's making my stomach turn. The leverage monster. You see, there's a dirty little secret in the silver market that nobody wants to talk about. For every ounce of physical silver that exists, there are approximately 250 ounces of paper silver being traded. Think about that for a second. 250 to 1. That means 99.6% of the silver being bought and sold doesn't actually exist. It's just contracts, promises, digital entries in a ledger. And here's what happens when a market like that goes vertical. The people who are short those contracts start panicking. They either need to deliver physical silver they don't have, or they need to buy back their positions at whatever price the market demands. And when they start buying to cover, that's when prices go parabolic. And this is crucial, that kind of move is unstable. It's built on fear and forced liquidation, not on organic demand. It's a rocket ship with no landing gear. And history has shown us, over and over again, that when these leverage-driven squeezes finally break, they don't just fall back to where they started, they overcorrect. The $300 question. So let's address the elephant in the room. Will we see $300 silver in 2026? Here's my honest answer. Yes, but not the way most people think. If we hit $300, it won't be because of a steady, healthy climb. It'll be because something broke. Maybe it's a major bank that's on the wrong side of a derivatives bet. Maybe it's a supply shock from a major mining region. Maybe it's a currency crisis that sends people scrambling into anything tangible. But whatever it is, it'll be violent. And here's what you need to understand. The move to $300 won't be the opportunity. The move back down from $300, that's where the real wealth gets transferred. Because that's when the weak hands, the ones who bought at the top, who believed the hype, who thought it could only go up, they'll panic. They'll sell at $200, $150, maybe even back to $80. And the smart money, they'll be waiting. The signal. Everyone's missing now. I promised you earlier that I'd show you the one signal that matters most. The one that'll tell us if this rally is real or if it's a trap. And here it is. Watch the mining stocks. Not the price of silver itself. The mining stocks. You see, in a real bull market, in a sustainable rally, the mining companies outperform the metal. It's called leverage. If silver goes up 50%, the miners should go up 150% or more. But right now, silver's up 30% in the last month, and most of the major miners, they're up 15%, maybe 20%. They're lagging. And that tells me something critical. The professional money, the institutional investors who really move markets, they're not convinced yet. They're watching. They're waiting. But they're not betting big. And until they do, this rally is running on retail enthusiasm and short covering, which means it's fragile. The bottom line. So here's what I want you to take away from this. Could silver hit $300 in 2026? Absolutely. The fundamentals are there. The supply deficit is real. The demand is accelerating. But the path to $300 matters just as much as the destination. If we get there through a panic-driven squeeze, you better have your exit strategy ready, because what goes up on fear comes down on terror. But if we get there through steady institutional accumulation, through genuine supply shortages, through organic industrial demand, then $300 might just be the beginning. The question is, which one are we seeing? And in the final section, I'm going to show you exactly how to tell the difference. All right, we've covered a lot of ground here. We've talked about the forces pushing silver higher. We've talked about the leverage traps waiting to snap shut. We've talked about the warning signals flashing in the mining stocks, but none of that matters if you don't know what to do with this information. So let me give you something practical, something you can use today, whether silver's at $100, $200, or $300, the three-tier approach now. I learned this lesson the hard way back in 2011. Silver hit $49 an ounce, and I was convinced it was going to $100. I had everything, and I mean everything, positioned for that move. And then, in 3 days, it dropped to 35. I didn't lose my shirt, but I learned something more valuable than any profit I could have made. I learned that in volatile markets, you don't play with one strategy, you play with three. Tier 1, the foundation. This is your physical silver, the coins, the bars, the stuff you can hold in your hand. This isn't trading capital. This is insurance. Insurance against currency collapse. Insurance against system failure. Insurance against the kind of events that make headlines for decades. And here's the rule. You never sell this tier. Not at $100, not at $300, not at $500. This is the silver you're holding for your grandchildren. Because if we're right about the supply deficit, if we're right about the industrial demand, if we're right about the trust collapse, then physical silver isn't going to be measured in dollars eventually. It's going to be measured in what it can buy. Tier 2, the tactical position. This is where you make your calculated bets. Mining stocks, silver ETFs, maybe some call options if you know what you're doing. This is the capital you're willing to risk for outsized returns. But here's the critical part. You need to have a plan before you enter. Not after you're up 50%, not after you're down 30%. Before. Write it down. If silver hits X price, I'm taking 50% off the table. If it drops below Y, I'm cutting my losses. If the mining stocks start outperforming by Z ratio, I'm adding to my position. Whatever your rules are, set them now, because I promise you, when silver's moving $5 a day in either direction, your emotions will lie to you. Fear will tell you to sell at the bottom. Greed will tell you to hold through the top. But your rules, if you set them when you're thinking clearly, they'll save you. Tier 3, the speculation. This is the smallest portion of your capital. Maybe 5%, maybe 10% if you're aggressive. And this is where you take the moonshot bets. Junior mining stocks, options on silver futures, maybe even some of the more speculative plays in the space. This is the capital you're prepared to lose completely. But if you're right, this is where 10x, 20x, even 50x returns come from. The key is, you never let this tier bleed into the other two. You keep it separate, you keep it small, and you keep it disciplined. The 2026 reality check. Now, let's bring this back to the original question. Will we see $300 silver in 2026? Here's what I think. If the current trajectory continues, if industrial demand keeps accelerating, if the supply deficit keeps widening, if geopolitical tensions keep pushing people toward hard assets, then yes, $300 is not only possible, it's probable, but it won't be a straight line. There will be pullbacks that shake out 80% of the people watching this video. There will be moments where it looks like the rally is over. Moments where the mainstream media declares silver dead. Moments where even the true believers start to doubt. And that's exactly when you need to remember what we talked about today. The real opportunity. Because here's the truth that nobody wants to hear. The biggest money in silver won't be made by the people who buy $30 and hold a $300. It'll be made by the people who understand the cycles, who buy the dips when everyone's panicking, who take profits when everyone's euphoric, who position themselves before the next leg up begins. And right now, we're in the early stages of something significant. Not the beginning, but not the end either. We're in that middle phase, where the smart money accumulates, where the patient investors build positions, where the foundation gets laid for the real move. Your next steps. So here's what I want you to do. First, assess where you are right now. Do you have physical silver? If not, start there. Even if it's just a few ounces, get something tangible. Second, if you're going to play the tactical game, set your rules today. Write them down, share them with someone, make them real. Third, keep watching the signals. The mining stocks, the supply data, the industrial demand numbers, these will tell you more than any price prediction ever could. And finally, remember that this isn't a sprint. This is a marathon that might last years. The people who win in precious metals aren't the ones who try to time every move perfectly. They're the ones who position intelligently, stay disciplined, and think in decades, not days. Now, before we wrap up, I want to hear from you. What's your silver price target for 2026? Are you buying physical trading miners or staying on the sidelines? Drop your thoughts in the comments below. And don't forget about our giveaway. Like this video, comment with your favorite form of silver or your 2026 price prediction. Make sure you're subscribed, and we'll pick a winner at the end of the month. This is Silver Radar, where we cut through the noise and focus on what actually matters. Thanks for watching, and I'll see you in the next one. Stay sharp out there.